what things could raise flags? What are those things that the IRS look for when they read income tax returns?
Just one second. Say it again, I'm sorry.
What could raise flags? You know, what could be a warning for the IRS when they read an income tax return? What things that people commit sometimes that they don't realize?
That's a good question also. Donations, excessive donations. Again, IRS looks at the relationship between gross income and those items of deductions. As I said, like donations, specifically medical expenses, let me see, employee business expenses.
How about expenses in the house? Improvement, you know, you make improvement in the house. Those are expenses?
No, they're not expenses. If they are what we call capital improvements, like you add a room, or let me see, adding a room, adding a bathroom, adding
I see.
Improving your living room. Those are what we can be classified as capital expenditures. And what you do in those cases is keep the receipts, because in the event that you sell your home, that would be considered in determining the cost of your home.
I see.
That was, well, if you bought your home for $100,000 and you keep improving it by adding more rooms, more bathrooms, then the cost will increase, and therefore, when you sell those the home, you gain a profit will be less.
So you're saying that if it's only cosmetic, like painting or just doing, you know, for aesthetic's sake, those are not included?
No, those are not included. Painting, little repairs like a broken wall or a hole in the wall.
I see. Mm-hmm.
Plumbing, things like that, no.
Right. Finally, Danny, would like to ask, how does one choose a certified public accountant? You know how it is, there are many people that do income tax returns, you know, when it's filing season. And some people just go to the one maybe next door, somebody by the street, or just go somewhere where they will be offered, you know, given the opportunity to file, and they say you will have a lot of refund. So how does one choose?
Well, first of all, when you're looking for an accountant, maybe first choice would be a referral from a good friend that had experience with that accountant. And then, a person that would not charge you based on your what do you call that, refunds.
I see.
And those are people that are really take advantage of the taxpayers by padding up the expenses and getting a lot of refunds, but then later on with their problems with the IRS.
Yeah, that's right.
Yeah, and then you must look for an accountant who has some kind of permanency in his or her office. Like that they are not just there for the tax season, and after April 15 they disappear.
That's right. Yes.
And if you have problems, then you could not call them up or refer to them.
So, Danny, when it's fraudulent tax return that they file, who will be liable? Is it the person that prepared the tax for them, or it is the client?
Oh, the client. And the both of them will be liable.
Oh, wow.
Oh, yeah, yes. Both of them will be liable.
That's right.
I have heard and read about those cases.
That's true.
Tax preparer and taxpayers.
Mm-hmm.
They got into trouble because of those.
Right. That's true. What other services do you offer, Danny?
Well, I do incorporate, for example, I form corporations, partnerships, LLCs, and I advise them what's the proper form of business that they should well, the tax form, if they want a corporation or a partnership or an LLC.